Welcome to today's video. We're exposing the hidden dangers of do-it-yourself quitclaim deeds, the deceptively simple form that can cost you your refinance, cloud your title, and even jeopardize long-term healthcare benefits. We'll walk through what a quitclaim deed is, why lenders often stop refinances after a DIY transfer, how Medicaid's look-back rules can create severe penalties, and who you should consult before you sign anything. Let's begin. Here's our roadmap. First, we'll define what a quitclaim deed actually does. Next, we'll connect that to refinancing requirements and title insurance. Then, we'll examine Medicaid look-back rules and tax implications. After that, we'll arm you with safer alternatives and a checklist. We'll test your knowledge with a couple of quick quizzes. And finally, we'll wrap with a clear verdict and next steps. A quitclaim deed transfers the grantor's interest in a property to a grantee without any warranties. That means if there are prior claims, lesions, or defects, the grantee receives them along with the property. Because it's easy to fill out and commonly used between family members as a gift, people assume it's safe. However, it's critical to understand there are no guarantees with a quitclaim deed. If you're not verifying title quality or following state-specific execution requirements, you can easily create a title defect or cloud the title, which triggers downstream problems. This presentation is for educational purposes only and does not constitute legal, tax, or financial advice. Real estate and elder law rules vary significantly by state and situation. Before executing any deed or relying on this information to make decisions, consult a qualified real estate attorney, a reputable title company, and, where relevant, an elder law or tax professional. The ease of downloading a quitclaim deed form masks serious risks. Each state has specific execution rules: witnessing, notarization, legal descriptions, and formatting. A minor error can create a title defect. Even if you execute it correctly, a quitclaim deed provides no warranty of title, so any prior liens or claims remain unresolved. If your goal is to refinance, lenders and title insurers demand a clean, insurable title. A clouded title, whether caused by prior defects or your execution errors, often results in immediate delays or denials. Refinancing hinges on the title being clean and insurable. Title companies issue commitments with exceptions when defects exist. A DIY quitclaim deed frequently introduces errors, missed descriptions, missing acknowledgments, or improper witnessing that create exceptions. Lenders cannot fund with unresolved title exceptions, so they pause or deny the refinance. Curative work, such as corrective deeds, affidavits, or even quiet title actions, can be time-consuming and expensive. If a transfer is being used to facilitate a refinance, engage a title company and an attorney at the start to avoid these obstacles. Many family transfers are considered gifts. Gifts can lead to property tax reassessment depending on jurisdiction. More critically, for older homeowners, Medicaid has a look-back period, typically 5 years, during which asset transfers are examined. If a home is gifted during this period, Medicaid may impose a penalty period, delaying eligibility for essential long-term care benefits. The cost of losing or delaying benefits can vastly outweigh any perceived savings from avoiding legal fees. Before proceeding, consult an elder law attorney to structure transfers properly and coordinate with a tax professional to evaluate consequences. A quitclaim deed transfers whatever the grantor owns, with no assurances regarding the quality of titles. It's quick and inexpensive initially, but risky because defects pass through. A general or special warranty deed includes assurances, either broad or limited, that the grantor stands behind the title. Those assurances typically require proper title searches and curative work, which raise the upfront cost but reduce long-term risk. For transactions intersecting with financing, lenders and title insurers are usually more comfortable with deeds backed by proper title work. This table links common scenarios to primary risks and the professionals who should be consulted first. When changing ownership among family members, execution mistakes can cloud title, so coordinate with a title company and a real estate attorney. For refinance preparation, work with the title company and lender early to ensure insurability. If the transfer involves an elderly owner, consult an elder law attorney to avoid Medicaid penalties. For tax exposure, coordinate with a CPA or tax advisor. Use this checklist to reduce risk. Clarify your objective. Obtain a title search to identify issues. Select the appropriate deed type with your attorney's guidance. Execute the deed according to your state's formalities. Record correctly and confirm it's indexed. Coordinate early with your lender and title insurer if refinancing. For elderly owners, get elder law advice about Medicaid lookback concerns. Finally, ensure proper documentation of consideration and any required tax filings. Quiz time. Question: true or false? A quitclaim deed guarantees that the title is free of liens and defects. Option A, true. Option B, false. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is false. A quitclaim deed provides no warranties regarding the status of title. It only transfers whatever interest the grantor holds, if any, and any defects or liens remain. Second quiz. What is the typical Medicaid lookback period that can penalize gifting a home? Option A, 1 year. Option B, 3 years. Option C, 5 years. Option D, 10 years. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is 5 years. Medicaid often evaluates transfers made within a 5-year lookback period, and gifts during that time can cause penalty periods that delay or jeopardize access to benefits. Although a downloadable quitclaim deed form may cost only a small amount, the downstream expenses can be significant. Refinancing delays or denials can increase interest costs or cause you to miss favorable rate windows. Curative legal work to fix title defects can be far more expensive than doing it correctly initially. If Medicaid penalties apply, the financial consequences can be severe. In short, the initial savings can be dwarfed by the risks to long-term family wealth. This state diagram tracks the journey from a clean title to either a funded refinance or a rejection. Starting a clean title, a do-it-yourself quitclaim deed often leads to the state title clouded. From there, curative actions, such as corrective deeds or affidavits, may restore insurability. If curative work succeeds, the process reaches title insurable, at which point the lender and title company can issue a commitment and proceed to funded refi. If curative work fails, the path ends at rejected refi. A professionally managed transfer can sometimes move directly from a properly executed deed to title insurable, bypassing common pitfalls. These are the essential points. Quitclaim deeds provide no warranties. Refinancing requires an insurable title, and DIY execution mistakes jeopardize financing. Medicaid has a 5-year lookback that penalizes gifts and can affect access to care. Always coordinate with a title company and an attorney for transfers involving financing or elder planning. The small upfront savings can lead to major long-term losses. The verdict is straightforward. Do not risk generational wealth on generic, copied paperwork. For any transfer connected to refinancing, professional oversight is essential. If the owner is elderly, engage elder law counsel before gifting any interest. When unsure, pause and consult the right professionals before proceeding. Thank you for watching. If you found this valuable, please like the video, share it with anyone considering a deed transfer, and subscribe for more homeowner guides. I'd love to hear your questions and experiences in the comments.